So the markets have literally just closed. It's Friday, the 23rd of July 2021, and it's 10 o'clock UK time. And so here you see that the markets have just closed, and this blue mark here represents Sunday evening when the markets opened. So everything you see here, this is Monday, Tuesday, Wednesday, Thursday, and today is Friday. Between these lines is Friday. So let's just remind you of what I said last week. But because price is below, I'm only looking to sell. Trading doesn't get much simpler than that. So last week I said that we were still in a downward turn because, like I said, price was below this one-day moving average. So what had happened was just a few days, last Thursday, we had this arrow and we would have sold the market. So we were still in positive territory when the markets closed on the Sunday. And what happened on the Monday when the markets were in full swing was that price came down, and this red line here represents the break-even mark. It's this line here is where our take profit is. So what happened was we was selling the market at this downward arrow here, and our stop loss was up here. Now, because the market came down on the Monday and hit our 1-to-1 ratio, we moved our stop loss to break even, which was around about there. So the markets came down. It still was really nowhere near our take profit. And then whether you want to call it stop hunting or whatever you want to call it, the market pinged up and hit our break even, our stop loss. And of course the market typically came back down again, but still really didn't come near our take profit. It tried a couple of times, and then of course, even if you hadn't have set your stop loss to break even at this point, you probably would have later on. Or maybe you didn't. Maybe you kept your stop loss right up here, and maybe you're still in the trade in the hope that it will come down and hit the take profit. And of course, there's nothing wrong in doing that. It's just that that's not the way I trade. So if the trade was entered here, look, you had it was a 40 pip stop loss and a 40 pip to when I decided to set the stop loss to break even. And of course, it was an 80 pip take profit right down there. So if you're the kind of trader that likes to just keep their stop loss in place regardless and just let the market do its thing, and that's totally okay, then of course you're still in profit from this trade earlier last week. But this week has now ended, and for me, I was taken out of my trade around about on the Monday itself. So Tuesday was no trade, Wednesday was no trade, Thursday there was another arrow, another indication for me to get in the market. However, again, these are my rules. I never set my stop loss to more than 50 pips. There is no the obvious immediate high is right up here. So if we were to start again, the stop loss would be there and the trade would be right here. Now, if we measure that distance, that is a massive kind of 75 pips. So this trade literally, this trade here with this arrow at the crossing of the MACD, well, it's not a crossing of the MACD. As I've explained in my previous videos, this little indicator that I have created, it crosses the zero line, but also waits for it to cross above or over by 3 pips. And sometimes what happens is it doesn't actually cross over, but it comes back by 3 pips, and that's what it did here. So it gave the signal. You don't have to take it if you see that the MACD doesn't actually physically cross. You could call this a fake signal, but for me, I don't care. It's a signal nevertheless, but I would only take this trade if it had a reasonable stop loss. You could say that this is a high here, and you could ignore this spike, and you could say that you had a possible stop loss of 50 pips if it was just above this area here. But for me, I'm not interested in this trade, so I didn't take it. So that was this week, and as far as I'm concerned, I'm not in any active trades. As for next week, the same applies. Price here is below the 1-day moving average, so therefore I will still be looking to sell the market. The only change would be made is if price just continued going up and crossed above this 1-day moving average and stayed above it, and then I got a MACD crossover alert, in which case I would be looking to buy. But currently, when the markets open Sunday evening, or maybe for you Monday morning, depending on where you are in the world, I will only be looking to sell the market on the EURUSD. So that's my forecast. Very, very simple. That's my forecast for next week. By the way, when I was in this trade, not this week, but the week before, it did go down as far as 66 pips, which in itself is a fantastic trade. And my forecast being bearish or downward was in fact completely correct, and the market did indeed go down. Will it continue to go down? Well, no one really knows that. But as far as I'm concerned, for next week, I will be looking to sell the market on the EURUSD. If you enjoyed this video, please subscribe or give it a thumbs up, or even comment below if you have a different opinion about what the market will do next week. Thank you for watching, and I'll see you next time.